Welcome to our monthly DBIX interview on the world economy. This month I talked to Stefan Schneider from Deutsche Bank Research about the credit crunch in China. Do we have to fear a banking crisis? But first of all, let's have a look on the figures. Mr. Schneider, let's have a look on the DBIX. How did the world economy develop in June?
The DBIX remained unchanged at 0.2, the same level than the previous 2 months, which shows that the world economy is not really doing that well. We have seen a slowdown compared to the beginning of the year, and any hopes for a stronger recovery in summer or early H2 have basically taken a move to the back burner.
There are fears about the Chinese economy. So far, the Chinese central bank stimulated the economy by putting money into the markets. Why did they stop this right now?
Yeah, there was an unexpected squeeze in the bank market, which sent interbank interest rates sky high. And obviously, this has an impact on the lending behavior of Chinese banks. They have become much more cautious, and one speculates, and that's also our view, that exactly that was the intention of the government or the central bank, basically to put a stop to excessive credit growth, which at the end of the day will lead to investment which is not really viable and might cause problems in banks' balance sheets further down the road.
So do you think the Chinese central bank was successful with this step?
To a certain extent, yes, we think that the lending behavior of banks will at least till August, September be somewhat weaker and more cautious, and then the measure or the non-measure, because the bank didn't help, of the central bank was actually accompanied by statements from the government saying that it's more the quality of growth than the growth rate itself, and also prompting and asking some of the government authorities to cut their spending. So that all points into the direction that there is, I wouldn't call it an austerity debate, but that still the overall consensus of the new Chinese leadership has moved in the direction of preferring a little lower growth rate and less risky trend in the economy.
But we don't have to fear a banking crisis in China?
Not really. If you look at the amount of money the Chinese government has, any kind of banking crisis can easily be basically killed right at the beginning.
Okay, but which influence does this new type of flooding the markets with money on not have on the world economy?
It adds to the uncertainty. From a European perspective, it was mainly the US economy and the Chinese economy where we pinned our hopes for an export recovery onto. And we discussed the US, it's recovering but slower than expected, and now hopes that China will bail Europe out in terms of export demand, which I thought were exaggerated to begin with, but they have received a further dampener. So, that's really not very good news for Europe and for the global economy as a whole.
Okay. We will talk on central banks in Europe, the ECB, and the Fed in the US later on. Thank you so far, Mr. Schneider.
You're welcome.